Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Fibonacci method. In this webinar, I will be sharing how you can trade Fibonacci strategies with Fibonacci tool using trend inception and trend reversal levels, especially when these levels in a play in current market conditions. But first, I would like to remind you that everything I do for educational purposes, and most importantly, that everything you will witness in this webinar is completely proprietary. In 2008, when market was crashing and collapsing, I was still paying attention to fundamentals and indicators. In 2008, this was one of the stocks I was holding. Chesapeake Energy was a key stock that had stunning fundamentals. Unfortunately, at that time, market was collapsing exactly as it is collapsing right now. This is what S&P looks like this morning on weekly chart. S&P collapsing because it reached reversal zone. These levels have been present in our trading room for years. This is exact same sequence, exact same price action patterns, price forming on any instrument, any time frame, including Amazon. As you can see, word reversal zone is present and price collapsing, staging exact same formations as we witnessed in 2008, when reversal zone was reached on monthly and weekly charts. What is holding this collapse? This Fibonacci support is a key. These formations absolutely expected and absolutely been present in our trading room for years. Here we go, let's walk down memory lane. This is S&P monthly chart that's been present in the trading room since 2011. Do you remember this correction 2014, 2015 and famous 1800 support with 2800 in front of you? Fibonacci is the only natural predictive tool in the market, and that's exactly what you will see in this webinar. Absolutely expected, absolutely predictive, absolutely natural. And that's what separates Fibonacci from all the other indicators. And this is what I will show you time and time again in this presentation. And this is what I recognized very, very clearly in 2008. Since 2008, I worked with traders from beginner to hedge fund trader who trading proprietary Fibonacci levels that apply to any instrument, any time frame, and any platform, including day trading charts. This is a chart from our trading room from this week. This is what played out on hourly chart this week. Looking for the chart, too many charts in front of me. That's my only problem. So here we go. Was anyone surprised by bullish pullback since yesterday? It was absolutely expected. Video recorded and posted on the website. Because price reached reversal zone. Except on day trading charts, it is crucial support. And as you can see on this chart, this was a collapse last week. This is a chart you use for your key trading entries on any time frame 1 minute and higher. As you can see in this screenshot, identical sequence as on weekly, as on monthly, as on day trading charts. If I will remove name of the chart, you would not have an idea what instrument this is. The only thing you know very, very clearly that every single one of these charts has common denominator, price. Price action patterns keep repeating in exact same sequence, time and time again. And this is what played out on S&P. If it never surprised you, bullish pullback from this level was expected, which again correlates very, very clearly with institutional support on daily chart. What will happen at the level I'm pointing to? 2676 last week reminded us very, very clearly. Buyers remain extremely weak. This is only bullish correction. This bullish correction been playing out on daily since early February. As per long-term charts, selling pressure and institutional sell-off in a progress, identified well in advance. So here's a couple of charts that are currently in a play on S&P. This is key support to the downside. This is what's holding this sell-off. As long as this support is respected, it is only bearish correction. But exact same sequence as you saw on S&P going back years. To remind you, monthly chart again, famous 1800 number that transformed into trend inception on weekly, where buyers stepped in from but reached ultimate Fibonacci resistance that taken S&P more than 7 months to break through. After this level, S&P moved on to higher level. This is absolutely crucial end of minor trend, which is constantly plays out on any instrument you will choose to trade, which is currently in a play on Apple. One second, here's Apple. Everyone recognizes that level? Apple in excruciating pain, Fibonacci resistance is reached. And that's what you witness in trading room every day on 1 minute S&P. Identical sequence. Except when you're witnessing exact same price action patterns on minute chart, it takes minutes and hours, not weeks, months and years. Accuracy, however, remains exactly the same, no matter what instrument you trade. Market is flawless Fibonacci sequence. Market preset by Fibonacci, the only natural predictive tool in the markets. And that's what I discovered in 2008, and that's all I've been working. Pure price and Fibonacci. No matter what time frame, no matter what instrument, no matter what platform, method is traded on. Fibonacci was discovered by Leonardo Pisano in the 13th century. This special mathematical sequence creates repetitive spirals and triangles that are also present in nature and also present in human body. Exact same patterns present in financial markets. Financial markets are transformed by this Fibonacci sequence that starts with 0 and 1, where each subsequent number is the sum of previous two. This golden ratio holding the key to trend inception and trend reversal levels. Market is a Fibonacci puzzle. Price action and Fibonacci form repetitive price action patterns which can be capitalized upon in any market for trade entries and trade targets. Fibonacci method can be traded in both day trading and investment positions, as well as on stocks, futures, forex, ETFs, and options. No indicator on the planet will give you ultimate trend inception and trend reversal levels, minutes, hours, days, weeks, months in advance. Only Fibonacci can do that. Here's a reminder of what's playing out currently on Tesla. Do you remember Tesla at reversal zone? Look back to 2017. Tesla's collapse in a progress. Today, Tesla sitting at crucial Fibonacci support, end of minor bearish trend. This support is out, Tesla in free fall to 210. Exact same identical sequence as you see also on oil weekly. Do you remember this formation on oil where buyers stepped in from at trend inception levels? Let me remind you what chart on oil looked like before bullish rally had started. This was oil in February 2016. And if you understand the importance of Fibonacci reversal zone on S&P weekly, just remember where oil was at reversal zone at 2011. This is exactly where buyers stepped in from on oil. This is exactly what's happening on oil now. Every single instrument, every single time frame, identical Fibonacci sequence. The only difference, risk management and trader psychology. Do you want to hold position 5 minutes, 5 hours, 5 days, 5 weeks, or 5 years? Do you want to trade Forex or options? Price action and Fibonacci remains the same. Liquidity, trader psychology, and how long trader holding the position is the difference. No indicator will give you market clarity. Indicators encounter many conflicting signals, creating confusion and indecision. Pure price, not blocked by any indicators, giving you very clear understanding of price action. Pure price for entry and Fibonacci for exits is a key to the method. Fibonacci is not another indicator. Fibonacci is naturally predictive tool, which is mathematical sequence and can be used on any platform, any instrument, and any time frame. This is the most efficient and most profitable market entries which occur at trend inception in day trading and position trading. As you saw on multiple examples I had shown you, as played out this week on S&P, as played out this morning. Do you remember this trend inception at reversal zone? Do you remember market collapse from reversal zone? This is a key. This is where market collapsing from, and this is where bullish rally had started from. Only Fibonacci can identify these levels in advance, and that's a key. If you choose to use exact same strategies for your long-term investment decisions, why not? Exact same strategy, exact same tool applies. No software, no indicators of any kind. Method based on discipline, using trade with price action, and Fibonacci and tool for exits. Since 2011, I worked with traders from beginner through hedge fund trader in US and abroad, who are using method on multiple instruments and time frames I've never even heard of. As long as instrument has price, that's all that matters. As long as Fibonacci tool can be used on the platform. This is crucial for targets, support, and resistance levels, for day trading or investment decisions. So this is what market does every day, every time on any instrument, any platform, any time frame. This is the core of the method. Market moves in 5 Fibonacci waves. Trend inception at wave 1 is a key. Nothing less, nothing more to the story. Trend inception is what's been in a play on S&P since lunch and early morning this morning. Trend inception is what's in a play currently on Amazon that started its collapse just like S&P started bullish rally on hourly. What is the difference? If you're using weekly chart on Amazon, you're holding position for weeks, months, and years. If you're using this chart on S&P, you're using 2, 3, 4, 5, 6, 7, 11-minute chart, tick chart, any chart you will wish. As this morning we dealt with the end of the minor trend on S&P for many hours. Had taken S&P 8 hours to break through this level, and this is where S&P closed at the end of the day. Identical formula on all the instruments, all the time frames. This is what's playing out currently on USO, derivative of oil. Identical reversal zone and the end of the minor trend, where oil is now. The only difference on S&P day trading chart, it was ultimate resistance. And that's what price does every time. Identical Fibonacci formations, with trend inception, wave 1 being ultimate point of entry, no matter what you choose to trade. If you choose to trade against the trend, you will start trading wave 2, your success rate will drop significantly. Conservative trader will never ever trade against the trend, as he recognizing quality, never quantity of trades, is a core to success. If trend inception entry was missed, knowledgeable price action and Fibonacci trader will take advantage of inception of wave 3. No other entries are possible. If you start trading at the end of wave 3 or wave 4, your accuracy and success starts dropping significantly. Trend inception is ultimate point of entry. This is a very crucial reminder. What played out on Euro in 2014? Do you remember that reversal zone? Do you remember Euro at 3,900? Do you remember where S&P is now on weekly? Do you know what to do with your position? Identical sequence in a play right now, in the markets, on Facebook, on Amazon, as you see on Euro in 2014. Knowing what to do with your position is not something I can teach in the next few minutes. But this is what I can teach you right now. This is the core to your trading. If you're trading major trend, 5-wave formations are the key. Trend inception is ultimate point of entry. If we're dealing with minor trend, trend will end at decision point 1. Here's where Apple had ended and been stuck for a long time. Buyers are weak on Apple. And this is where Euro rallied from. Remember ultimate support on monthly? Identical strategy, identical formula, as you see every day in the room on S&P. Strategy is constant. It's all the same. The only difference, if you choose to be day trader or you choose to be a position trader. Identical strategy, identical Fibonacci tool and levels. And this is the pattern price keeps repeating time and time again. Nothing less, nothing more. You'll be amazed how much you can see when you remove indicators from your charts. So here's a couple of examples. Here's a chart of Nasdaq. exact same identical formula you see in front of you right now. 5-wave pattern, bullish rally that seems so spectacular and powerful ended at reversal zone. And here's very interesting fact about top hedge fund in US, Renaissance Fund. Hedge fund family fund based in US, one of the top funds using Fibonacci numbers. Is that possible? Not indicators. Fibonacci is what forms the markets, is what does exact same dance every time, nothing less and nothing more. And this is the focus of the method, and this is what I teach every day in the course, and this is what I demonstrate in the trading room on S&P Mini Future. If you come to the website, you can review the information about course. All classes are live. Group course 8-week, private mentoring 16. You can sign up at any moment, enjoy at any time. Very important class this Friday, where we dissecting long-term Fibonacci strategies going all the way back to 2008 and reviewing historical formations we're witnessing once again in the markets. Here's the most important part of the website, where you can listen to the graduates from beginner to hedge fund trader who are trading the method in US and globally, on S&P Mini Futures, on stocks, on Forex, on options. All the information available on the website under Learn, as well as I highly encourage you review YouTube channel and videos going back 8 years. On the blog, you can review the latest posts on the blog, and again, YouTube channel is multiple trade recordings from our trading room, where you can also sign up on the website and ask questions in the trading room when S&P in correction. Each and every day we're dealing with corrections. We're constantly looking on other instruments if market is boring. We don't like wasting time. And if you ever have any questions, never hesitate to contact me under Contact Us page. But please review the information on the website first, info@fibinstitute.com or 925-257-4298. If you have any questions I can answer in the very few minutes I have left, I will gladly do so. So I know how it will reverse at what level, because I've been utilizing Fibonacci strategies since 2008. This is what you learn in the course, how and where to apply Fibonacci, where the anchor is, what levels to use, what levels matter, what levels do not matter. And that's exact same formula that you can apply and use on any instrument. What is the biggest mistake traders make? Trade with fixed stops. If God forbid in this market you're using fixed stops, it's not a happy story. Price show you very clearly where your stop must be. Fibonacci show you very clearly where your targets must be. And that's the key. So, in the trading room, when market is not doing much, tomorrow is oil news, which is extremely active and exciting day in the trading room. You can witness the accuracy of the method instantly during oil news, which you will receive link in invitation to the trading room as well. Link posted in front of you. So please make sure you register on that link, as link is posted to the trading room for Wednesday and Thursday in front of you, traders. Should be very exciting day in the markets tomorrow. So, we are working with pretty powerful historical market formations. We are setting up for historical volatility once again. So, Received a question about the short. This is a short. This is Fibonacci resistance. Everyone seeing this level on the 1 minute chart? This is where Apple is now. Everyone seeing this? What is the difference? It is weekly. This is your investment decisions. Apple pulled up already $13 from this resistance and been stuck at this resistance since October last year. On 1 minute chart you see very clearly it can collapse into oblivion just like it's done in years prior. But this is also a very powerful example and very powerful reminder. Do you remember Apple at 91? Do you remember what happened on Apple when Apple was at 91? Apple came out with the worst earnings in 13 years. What did I say? What is posted on YouTube channel and social media and discussed in the trading room? This is ultimate Fibonacci support. No earnings, no news matters. Support is present, rules are met, take a trade. Rules are not met, do not touch the market. And that was very powerful reminder. Fibonacci will override any news. Rules are met, take a trade. Respect news only due to volatility, nothing else. And that's all that matters. And that's what you can witness tomorrow in the trading room. Identical strategy except on S&P E-mini future. Which again, what S&P had done today. This is exact same strategy except on your day trading chart. S&P collapsed from reversal zone at 2660 all the way until this support, where S&P struggled this morning at this resistance, where short was in a play in the trading room. And that's the key. So, on weekly chart, ultimate support holding the collapse, as shown in multiple examples. This is a support on S&P. Any other questions? So if you have any questions, pretty please review everything on the Learn page and never hesitate to contact me. I always look forward hearing from you. If you're interested in mastering pure price and Fibonacci, I promise you, you will enjoy the course. Students become my dearest friends for life. On the website you can see multiple pictures with students. You can listen to testimonies. I travel the world meeting with students and graduates of the course. Thank you traders, thank you so much. And again, highly encourage you, please review the information on the website and never hesitate to contact me. Thank you traders, my joy and pleasure being with you. Thank you so much. Look forward to seeing you in the trading room tomorrow. Bye bye.
All right, we want to thank Alla for joining us, and we are out of time, so we're going to move on to our next speaker here. I'm going to test his microphone.